Joining us now is Andrea Teixeira, JPMorgan Senior Equity Research Analyst. Andrea, good to see you. This call stood out to me because all of these consumer staple numbers are coming down with the rising costs and the rising inflation. But most of your colleagues like P&G the best because it usually navigates all of these headwinds a little better than some of the others. Why do you downgrade it today?
Thank you, Sarah. So basically, I've been liking it for the last almost 4 years. When the stock was at 80, when we upgraded last in October of 2018, we still like relatively, but we just don't feel like the run on a relative basis on the valuation standpoint would warrant further re-rating on the stock. And we like names that are more exposed now to the reopening and underlying trends like Estee Lauder and Coca-Cola.
Why? Because you think that they haven't seen the full benefit of the reopening of economies and airports and stadiums and that sort of thing?
Yeah, no, I think relative to even Procter has been seeing some benefits from some of the categories like deodorants, like grooming, shaving, and also beauty, but not to the same level that we're going to see probably for Estee and Coca-Cola, which in the case of Coca-Cola, they have 50% of their revenues in basically on premises. So that's the reason why we like it better on a relative basis.
Which is basically out of the house. So who has pricing power in this group, Andrea, and who doesn't?
Yeah, no, that's a great question. And Coke is one example that has a lot of pricing power. Procter also has a lot of pricing power. That's not the reason why we took a pause here. It's just on a relative basis, the stock's trading like at a rich multiple relative to the history. It's like three turns of a multiple more expensive on a PE basis than the peers. And we see like more upside for, names like, as I said, Estee that is still going to benefit from consumption away from home. And therefore, we see more of a catalyst there.
What about valuations? The consumer staples are only down 1.5% this year because we've seen all this market volatility and increased recession concerns. And so naturally, staples are a place to hide, a place to go. Not as good as utilities, but still working out. So what has that done to valuations? And where do you want to go if you have increasing concerns about the economy within the group?
Yeah, no, again, a great question, because if you think about like the premiums, HPC has really widened the premiums. It's around 28% higher than the S&P, and the average in the last 5 years and the last 10 years about 20. So it has widened. It has to do also with the E getting lower because of the cost pressures. So there's some denominator effect there. We like, again, beverages are not as expensive on a relative basis to the S&P, so that's the reason why we like beverages better, and also because they also benefit from the reopening more than the HPC names.
Andrea Teixeira, lots of good information there. Thank you very much from JPMorgan.